Are you thinking of setting up in mobile or event catering? Are you wondering how and why you will want to structure your financial forecast? Perhaps this is because you are trying to secure some funding or indeed have it as a blueprint for a future operation. Once you have made the initial decision to start to trade, you will then be responsible for managing your costs. Costs will be related to those for overhead items, while others will be for operational expenses. Operating costs are the regular outgoings you need to pay to keep your business trading on a day-to-day basis. Capital costs will relate to one-off items you will need in running your catering or events business. Overhead costs, on the other hand, are what it costs to run the business. More generally, costs are classed as fixed or variable. It is important to keep strict control on your operating costs. If they start to exceed the amount you generate from sales, you will be operating at a loss. Operating at a loss over any extended period of time is unsustainable and can be a recipe for failure. The main operating costs of most mobile or event catering businesses are split between the fixed costs and variable costs. Below we look at what these costs are in the two important categories. First category: fixed costs. Fixed costs are outgoings that do not vary in relation to sales. They include the 6 important costs below. 1. Rent or mortgage. This is what your business incurs if it rents or mortgages the property where it operates. While these may increase, their increase is not related to sales increases. 2. Utilities. Utilities such as telephone bills, water and electric or gas rates will more generally be constant over the year or only marginally change. Nonetheless, they soon add up to your ongoing costs. 3. Loan repayments. If you took out any finance, whether that's from friends, family or a financial institution, this has to be repaid with interest. This ongoing repayment will soon add to your ongoing outgoings that you have to be aware of. 4. Business insurance. Who can plan what will come tomorrow with certainty? None of us can. A pandemic, a break-in, a flood, failure of a fridge or freezer, a breakdown of your van, all these carry risks that will not only impact on your operations, but also to your costs and sales. Insurance placates the negative impacts of such unplanned eventualities in the operation of your business. 5. Business tax. Business rates, VAT, corporation tax, and income tax are some of the significant taxes you will be expected to tend to. Preparing in time for these and having a system in place to routinely work them out will be a central part of your business life. 6. Licenses to trade. Not many licenses will be required for your operation. Most compliance with regulations of the Food and Safety Act 1990 is free. All you need is 28 days notification to your local authority before you start. Other licenses might need paying for, those such as local chamber membership and national associations for your trade. Just remember that the latter are not statutory, but important for your professional image. Second category: variable costs. Variable costs are outgoings that can change according to increased or reduced demand for your products. They include the 5 important costs below. 1. Labor. Whether you are working alone or with other people, there will be labor costs incurred. In addition, pension costs, national insurance, and income tax are also due on an ongoing basis. It's important that you consider these significant costs in your planning. 2. General maintenance. General maintenance may be to existing equipment that use or the building fabric. Nonetheless, having a pre-agreed arrangement with a maintenance management company for when things go wrong will be vital. It's an insurance against the great unknown. Costs for this will, however, have to be regularly borne. 3. Marketing. Having your new business's name out there will require some hard work. Marketing and promotion will be a major part of your work in your operation. It all comes at a significant cost, however, whether that's for printing some flyers or promoting a Facebook or Twitter post. 4. Ingredients. A major part of your work in catering will be to produce or prepare delicious meals for your customers. Costs for produce and ingredients that go into these meals do account for a significant percentage of your budget. Memberships with major cash and carries and local independent suppliers will save you a fortune in time and money. As part of your compliance, your local environmental officer will want to know your suppliers for traceability should things go wrong. Nonetheless, this is an ongoing cost that will increase with your volume of work. Remember to watch out for waste, something you can embed in your menu design. 5. Fuel for transport. Catering services are an outdoor endeavor, meaning that you will delivering your produce and services to your customers that you must travel to. Besides the time it takes you to travel, there will be costs relating to fuel as well as direct van costs. These will again depend on how far you are prepared to travel to deliver your services. Understand these important business costs on your way to building a successful mobile catering business. From understanding your operational costs to planning for your variable ones, these tips will be important in ensuring that your catering business idea is as best prepared as it can be. There couldn't be a better time to set up anew in the sector. It's a bold step you're choosing, so take it up with great fortitude. For more tips, tricks and ideas for everything catering, parties and events, please visit us at quibuffet.co.uk.